Welcome to Bunnex Investment Group. Today we are going to talk about a way to find highly explosive trade setups. By explosive trade setups, we mean very fast moving entries that takes less than 2 hours to hit your take profit. So we're saying after making your buy or sell, you would see the market issuing very large long candlesticks in your direction and hit you in a very short period of time. But before we go through, make sure you hit that subscribe button and check out the notification bell icon so that you won't miss any of our videos as we upload. So in this video, we are going to explain this in two parts, which is the first part being the news trading principle. It's one of the concepts that you may use to catch these highly explosive trade setups. Then the second one is level 3 entries, and we'll explain the levels behavior and know when to actually enter the market at level 3. So as shown on the outline, the first topic being news trades, and on that, as market maker traders, we do not need to know or to look for what the news is going to say. I've seen several traders trying to predict an outcome by reading, watching a lot of news, watching on CNBC Africa, on BBC News, and so forth, trying to predict what an outcome is going to be. But in our case, as market maker traders, we do not trade the CPI, but we trade the effects of the CPI. So market makers, who are the guys that we are against and who we need to trade in line with, knows the news outcome way before their announcement. Have you ever asked yourself, why is it when you go on Forex Factory or on FX Street, you'd see the minute when the CPI is announced to be above the expectation, you'd see the market actually rallying instantly. How does that happen? Is there someone who was actually knowing this before it happened? So you'd see that there are orders that were actually waiting for just the second the news is released to move the market. So these guys who are the beasts in this industry knows this outcome before their announcement, and this allows them to position themselves in a way to complete cycles or reverse the market. So just before the news, they will actually position the market in a way to incorporate what they need to do, right? So the general principle on news, which you should use, actually take note of this. It's actually an important principle. When news comes at level 3, that is after we have 1, 2, and 3, right? At level 3, expect to see a market reversal. So at level 3, we expect to see a market reversal when news comes at this position. So the market makers will actually position themselves probably to create a second leg that is open. You'd see that the pattern will look like this before the news has been announced. Then as soon as the news is announced, you'd see the market actually moving down in a very fast move that will actually trap those who were thinking the market is going up, or those who were actually researching and so forth. Then when the news comes within a level, right? Let's say we are level 1 and level 2. Before end of this level 2 and news comes, we expect to see trend continuation. That news is meant to actually go ahead with the trend. These are the positioning styles that I was talking about earlier. They position themselves to accommodate what the news is going to bring out. Then the last part is at the beginning of a level, we expect to see a stop hand. Let's say the news is actually coming at beginning of level 2, which is at this point, right? They'll actually induce, and then when news comes, they'll actually stop hand, go against what we were also thinking within the cycle. So to read the war principle, it says when news comes at level 3, expect a market reversal, and when news comes within a level, expect trend continuation, and at beginning of level, expect a stop hand. So let's see one of the illustration for clearer explanation. So this is Euro against USD. As we can see, we had level 1, level 2, and level 3. And during the time of recording this video, it was in September 2022, and the date was 13 September. We can see that after this cycle had completed, the next thing was now to expect to see the market reversing. The market makers, as I've said, they position themselves to accommodate the news that is going to come. In this case, on this particular day, they were actually, we were expecting the release of US CPI, and who knew that it was going to be in support of the US dollar? No one. But you can see that on this particular day, they created a perfect M, and after that, they actually made an explosive move. I shared this in the VIP Signals channel, which you can as well access through the link that I'll leave below. And we made a lot of money out of this best. So these are the trades that I'm talking about, the explosive, highly explosive trades. You need to have this skill to catch them within your SGI of strategies. Then another point where there are explosive entries. We've talked about news entries, and on news entries we've defined the news trading principle, which actually lets you know what to expect on each position within the market. Then there is another which doesn't incorporate news, which are called level 3 entries. So the market maker cycle has different movement phases, right? By phases we are saying level 1 is a market maker driven, right? On level 1, the market makers are involved, as you can see on the previous slide. In this case, this was level 1 of the market, right? And on level 1 of the market makers were involved. And within that involvement, we can see that the market was moving in a very fast move. And as you can see, when we were starting level 2, the market was now in consolidation phase. And we are saying at level 2, the market is now driven by retail traders. The market makers who usually withdraw some of their contracts and let the retail traders does the job to move the market with the tag of buys and sell amongst ourselves. So you'd see that in level 2, the market usually chops and moves very slowly without a proper direction that can be easily seen. Then at level 3, the market makers comes back in drive, right? So since the market makers have deep pockets, their involvement in the market has a huge impact and results in very fast moving market flow. So explosive trade entries can be done at H1 level 3 as shown in the next slide. So at level 3, as we've said, the market makers are now in drive again. That is another point where we expect to find our entries. And the entries will be a bounce on the 50 EMA as an initiation point of level 3 of the H1 time frame. In this case, we had level 1, right? And as you can see, level 2, there was very big consolidation. You can see we had a drop, but then the market started consolidating, and then at level 3, bounce on the 50 EMA, which is the blue one, the 50 EMA. That is when we actually see the market living in a very fast move. As you can see, we had 1, 2 big candlesticks and 3, and we end that day. So basically that is how you will be looking to get these explosive, highly fast moving trades that hits your take profit instantly. And it's a skill that you need to acquire, but it takes time. Of course, every skill needs at least a 10,000 hour rule, is actually a guaranteed way to reach your destination. So on that note, we come to the end of this video. Please check out our free Telegram channel. I'll leave the link in the description box below, and see you on the next one.